Good morning. This is David Bennett, and this is Bitcoin And, a podcast where I try to find the edge effect between the worlds of Bitcoin, gaming, permaculture, podcasting, and education to gain a better understanding of all. Edge effect is a concept from ecology describing a greater diversity of life where the edges of two systems overlap. While species from either system can be found at the edge, it is important to note there are species in the overlap that exist in neither system, and that is what I seek to uncover. So join me in discovering the variety of things being created as Bitcoin rubs up against other systems. It is 9:01 a.m. Pacific Daylight Time. It is the 11th day of October 2024, and this is episode 971 of Bitcoin And. The feds turn out to be shitcoiners. Yep, they do. Fidelity's got a massive breach on their customer base. That's not good. What else do we got here? We've got, it does look like Michael Saylor might be entering into the banking game. This is what I had conjectured a couple of weeks ago. We'll get into all that. We've got some news out of Bitcoin Amsterdam. Is there anything else going on here? Oh, yes, FTX is back in the news. Great. And then I've got a small mining story. But first, we've got to start with the Fidelity data breach exposing personal data of 77,000 customers. And this is written by Danny Santana, but out of CNET, which I don't normally use as a news source, but today we're getting into it. Fidelity Investments has suffered a data breach, ooh, whoop-de-doo, and it has compromised the personal information of 77,000 customers, the company said in a notice. The breach occurred in August and is tied to two accounts recently opened with the asset management company, according to the filing. It's not clear how these accounts allowed hackers access to customers' data, however. Fidelity has not revealed what specific customer data was accessed by the thieves, but said after concluding its investigation that, of course, no customer accounts or funds were compromised in the breach. Quote, "We detected the activity on August the 19th and immediately took steps to terminate that access." Fidelity declined to provide any further comments. Quote, "Fidelity takes its responsibility to serve customers and safeguard information seriously." Yeah, really? I call bullshit. And then they got a few paragraphs of what to do if you're included in the Fidelity breach. Honestly, it's the same shit anybody's ever going to tell you. You know, Wells Fargo breaches, any of these breaches, they basically say, you know, they're offering you 2 years of credit monitoring and identity theft protection. And, you know, honestly, that's just, in my opinion, that's just worse. Okay, so you've allowed the people to abscond with 77,000 customers' personal information, of which you won't tell us what it is. And your response is to have us go and give all that information again to yet one more company that could be breached. This is the response. It's always the response because there's literally nothing else they can do. All of these companies are massive honeypots. This KYC business needs to go away. Will it? Probably not anytime soon, but we've got to work on it. We got to keep pressure on whoever it is that we need to keep pressure on to get rid of KYC. And all of this comes out of the Banking Secrecy Act. And we don't need it. It has clearly been a failure from the outset, has continued to be a failure, but we have to ask our question, who is it a failure to? Well, it's a failure to the customers. But I guarantee you it's doing exactly what the people that put the Bank Secrecy Act in place in the first place, it's serving their needs quite well. Quite well. For installing fear in the populace? No, they don't care about that. That's honestly, nobody's scared of getting their shit lifted anymore. All of us understand we've already got all of our information is out there in the wind, twisting, right? But the people in power who have put KYC and know your customer and all that stuff into place, they know our information. That's what they want. They don't care if thieves or anybody else actually gets a hold of the information. That is not their priority. It never was. It is simply to tie you down by your identity, which is one of the reasons why I say nostr is very important. And if you don't understand why, I can't really spend the time to tell you about it here, but it is a different style of digital identity, and I highly recommend that you go find any nostr client. Go to coracle.social, go to primal.net, use Damus, use Amethyst, find any possible client that you can for nostr. Just get an identity. It's easy to do. You will see how it's done when you first get into one of these clients if you've never been there before. Now, from Bitcoin Amsterdam. Flawed research drives harmful Bitcoin policies. We'll find out more about it from Josh O'Sullivan out of Cointelegraph. Speakers at Bitcoin Amsterdam 2024 conference have highlighted the far-reaching consequences of misinformation in academic research on Bitcoin. During the Beyond Resistance Money panel discussion on day 2 of the conference, speakers said that academic inaccuracies have misled and continue to mislead the media, contributing to misguided government policies and harmful regulations. The Bitcoin advocates detailed how flawed studies on BTC emissions and mining practices have driven enormous, or rather erroneous, narratives in journalism and policymaking. One important issue discussed was the role of flawed academic research in spreading misinformation about Bitcoin. Andrew Bailey, a professor at Yale NUS College and senior fellow at the Bitcoin Policy Institute, highlighted a specific issue in an influential academic paper that inaccurately reported BTC emissions data, and he said, quote, "The problem, I'm afraid, is academics and the wrong or even damaging things that they say about Bitcoin. Academics have been wrong about Bitcoin, but nobody reads this stuff, right? Right?" End quote. Bailey pointed out that the paper contains a unit error in the chart that has not ever been corrected, even though it continues to be cited as factual. He emphasized that such mistakes can have a lasting impact on public understanding of Bitcoin. Bradley Rettler, associate professor of philosophy at the University of Wyoming, added that journalists often lack the time to verify or even deeply understand academic sources, further spreading these inaccuracies. According to Rettler, the reliance on academic papers by journalists who may not have the resources to become subject matter experts contributes to the problem. Quote, "So, the journalists read the academic papers and they translate them into everyday parlance, and the problem is when you start with crap, you end up getting crap." End quote. Craig Warmke, a member of the Bitcoin Policy Institute, warned that misinformation has real-world implications, particularly in the realm of policymaking. Quote, "Policymakers and regulators don't have time to read these academic papers, so they read the journalism, and this has resulted in some attacks on BTC mining, self-custody, as well as financial privacy." End quote. Warmke stated that this pattern has resulted in restrictive proposed legislation, especially in Sweden, to tax the BTC mining industry out of existence. He also said that there is an attack on software developers working on technologies that promote financial privacy. Quote, "These are serious issues. The problem has bled through to journalism and to policymaking and law enforcement and regulators and bad research on BTC, and academia is largely to blame, and so is the absence of the research." End quote. Warmke suggested that while academia has historically worked against Bitcoin, it is time for academics to start supporting the cryptocurrency. That's the end of the article. My commentary here is that I call it the academy, which is actually sort of what you should be calling it. All colleges and universities around the world, not just in the United States, not just in the West, basically the academy means all colleges and universities anywhere in the world. And the academy is in trouble. First and foremost, they've got a major problem on their hands that's developing right now. Some colleges knew it was coming, and some universities did too, and they prepared for it. They did well. Texas Tech University is one of them. UT is one of them. There's more than a few others, but most have not prepared well. Washington State University is one of those universities that did not prepare well. What am I talking about? The enrollment cliff. We knew it was coming. And it had nothing to do at all with student loans and younger people in coming into college refusing to get student loans and therefore not going into college at all because they just can't afford it. And that's a whole different issue. But it was because the amount of people that were available to go to college of college age were not present. We've had a decline in population. Lots of people stopped having babies. These guys saw it when they saw the numbers 20 years ago. They understood what was going to happen, and the decline kept going and kept going. It only meant that when you get to college at 18, 19, and 20 years old, there wasn't going to be the amount of people to go into college to get the student loans. Or if not get student loans, to get the jobs that would give them the money to pay for tuition, even though it would take them a lot longer. So there is that problem, and it is causing budgetary issues everywhere, not just Washington State University. That's just an example. You're going to see an evisceration of the academy, and it's going to happen within the next 10 years. You're going to see whole colleges just say, fuck it, we can't do it anymore. And my idea is to turn them into what? Old folks' homes. That's right, assisted living centers. You have a whole campus. You've got dormitories. You've got medical. Most of these places have some kind of medical facility. They have lunchrooms. They have cafeterias. They've got all manner of outdoor spaces. Perfect thing to do with these colleges and universities that did not figure this out is to just turn them into something that actually generates real money. On the other hand, we have this whole academic situation. There's been several instances of academic papers showing up in peer-reviewed publications that were written by AI, or worse, just absolute gibberish, just complete, just filled with nothing but jargon. And somehow they got through the peer review process, which means that anywhere between 3 and 5, and sometimes more, I suppose, human beings read that paper, make remarks on that paper, send it back to the author, and then the author makes those corrections or does whatever tidying up needs to be done, sends it back, and those same people read it again, and they either send it back with more commentary or they publish it. The amount of papers that are just nothing but jargon, gibberish, bullshit that have gotten through and had to be retracted when somebody who really had their shit together read it and was going, this doesn't make any sense. It took that. It took somebody actually reading it in the publication, a real scientist going, what the hell is this? This is stupid. And it has caused nothing but embarrassment. Now, there's something in this article that I wanted to point out. Yeah, here it is. Let me read this to you again. Bailey pointed out that the paper contains a unit error in a chart, and it has not been corrected, even though it continues to be cited as factual. What they mean, if you don't understand what unit error means, is like they've got a chart in this whatever paper that Bailey's talking about. And there's a chart in this thing, and it has probably a y-axis and an x-axis, right? And the units that are used on whatever side, or like it's either in the y-axis units or the x-axis units, like generally speaking, y would be time and x would be amount. So if there's a unit error, then that means that they're using the wrong units. Like, so it could be a situation where it's a order of magnitude error. It should have been 10, but instead it's printed as 100 units. Or it could be like a gibberish unit, like, 10 milligrams per mercury as a barometric pressure measurement. And if they use that in place of tons of CO2 being produced, well, that would be a unit error. What exactly this unit error is not the point. The fact of the matter is that the fact that there's a unit error means that whatever that chart is saying is complete and utter crap. It doesn't mean anything. If you've ever seen somebody like my wife has this problem all the time with her students, they'll send in a chart and the axes aren't labeled. It's just a bar chart or a line chart. And it's like, well, what does this even say? That's how bad this stuff can get. But in academia, when you've got peer-reviewed publications that have error units in the chart and nobody's caught it, or worse, we know that it's there and they refuse to correct it, this tells you the state of academic publication today. And it is not good. And a lot of this, I do believe, actually stems all the way back from the fact that these universities and colleges, the academy itself, is in big, big trouble. There's a lot of grants that are no longer being granted anymore because they're just running out of money. They can't afford to pay their staff. And now the colleges themselves are finding themselves in a, well, they don't have any students coming in. It's a bad situation, and it's causing really bad problems. So just be aware when you say, oh, another paper's come out saying that Bitcoin mining is crap or it's going to kill us all. It's probably based on crap. It probably is. Now, over to FTX. A customer from FTX is suing a hedge fund and says that the hedge fund reneged on the bankruptcy payout deal. This is out of CoinDesk, Sam Reynolds. A California-based former customer of FTX is suing hedge fund Olympus Peak, alleging that the firm's bankruptcy claims purchasing desk withheld promised payments on a claim he had sold to it. In documents filed with the U.S. District Court of Southern New York, Alexander Nicholas Girtz, I can't pronounce that name, says that he agreed to sell a $1.59 million FTX bankruptcy claim at a 42% discount to Olympus Peak Trade Claims Opportunities Fund with an excess claim provision. The agreement provided that if the claim is ultimately allowed in an amount that is greater than the claim amount, the buyer will purchase such excess claim amount by paying the excess claim amount multiplied by the purchase rate. This gentleman, whose name I cannot pronounce, agreed to the sale only because the purchase agreement contained a clause that expressly gave him the right to receive additional recovery in the event his claim was paid above par through the bankruptcy proceedings, according to the filing. Gritsky, or however you pronounce his name, attorneys write in the filing that the most recent FTX disclosure statement says that the claims similar to his are estimated to receive as much as 146% of their value in distributions, but they allege Olympus Peak made clear that they would not be fulfilling their end of the bargain. Quote, "We disagree with your position that you have retained any economic interest in the claim," an Olympus Peak representative wrote to Girtsky. Olympus Peak did not immediately respond to a request for comment. In the early days of the FTX bankruptcy, claims were going for 13 cents on the dollar on bankruptcy marketplaces. So what's going on here is this guy got, he had, like, I don't know, let's say, what do you say, $1.59 million. He sold it at a 42% discount. So he got, as far as I can tell, he got that end of the cash. So he ended up getting a check for whatever the post discount of $1.59 million out of FTX bankruptcy. But he's got a provision in there that says, look, man, if for whatever reason the payout ends up being higher, then you're going to pay me that extra money. And Olympus is saying that they're not going to hold up their end of that contract. And that's just sad. It's like when somebody, when two parties or multiple parties engage each other in a contract and they all sign it, how is it that you can just say, you know what, I'm just not going to do it? And I doubt very seriously that Olympus is going to be held, have their feet held to the fire. I honestly don't think this guy's going to get the rest of his money. So be aware, people have a tendency to renege on contracts, so you got to make that shit ironclad. FBI are shitcoiners. Yes, they are. And we have proof. The FBI made a profit from an Ethereum token they created to catch fraudsters. Decrypt Andre Bogonsky is writing this one. The most discussed coin on crypto Twitter over the past day arguably isn't Bitcoin or some novel asset rocketing to new heights. No. It's an Ethereum token created by the FBI to catch scammers, and one that made the agency a profit before trading was disabled. The Department of Justice unveiled a sweeping criminal case against 14 individuals and 4 crypto firms Wednesday. Gotbit, ZM Quant, CLS Global, and MyTrade were all accused of misconduct related to market manipulation, inflating tokens prices, and volumes on demand. Over the course of the investigation, the DOJ identified around 60 cryptocurrencies allegedly manipulated by defendants' wash trading bots, and that included a token created at the direction of law enforcement for a fake crypto company dubbed NextFund AI, the DOJ said on Wednesday. The token was used to identify, disrupt, and bring alleged fraudsters to justice, according to the special agent in charge of the FBI's Boston division, Jody Cohen, who called the FBI's deception unprecedented in a press release. On-chain data shows that the FBI's token, called NextF, was created in late May and that law enforcement apparently profited from the coin just before its trading was disabled 21 days ago. When a liquidity pool for NextF was created on the decentralized exchange Uniswap, the token's developer supplied around 5 ETH in liquidity worth $12,000 at the time, alongside 50 billion NextF. When 43 billion NextF was removed from the pool months later, the wallet gained approximately 11 ETH in liquidity back that was worth $26,500, netting the token's developer a $14,500 profit. And 2 weeks after disabling NextF's ability to trade, the wallet shuffled $30,000 worth of Ethereum to a new wallet, and the sum has remained there ever since, apparently under the FBI's control. Nick Vayman, co-founder and CEO of blockchain visualization startup Bubble Maps, described the FBI's apparent gains to Decrypt as fairly negligible, but it is a surprising result for a token designed to target fraudsters. The FBI, of course, did not immediately respond to requests for comment. In a statement, though, the DOJ said that 3 market makers had been charged with misconduct related to wash trading NextF, meaning that all 3 had engaged with the fake coin. According to a criminal complaint filed against a company called CLS, one of the firms accused of market manipulation, the FBI's fake token was traded artificially for its last few weeks. CLS traders allegedly bought and sold NextF among bots from August the 23rd to sometime after September the 5th. CLS allegedly created thousands of dollars of fake trading volume for NextF until the FBI eventually pulled the plug. As the DOJ's complaint states, quote, "The trading function of the NextFund AI token was disabled at the direction of law enforcement." So, yes, the profit is negligible, but that, in my opinion, that does not matter. The FBI should not be engaged in this kind of entrapment, not when they're going to make a profit off of it. So, what is the FBI going to do with this $14,500 in obvious profit? But further, what about this $30,000 that they shuffled between wallets after this whole thing was done? See, this is an issue. This is a real issue, and I do not know how to really wrap my head around it, except that if this kind of behavior continues from the FBI, what's to stop the FBI just going straight up shitcoin? Now, would this be actually good for Bitcoin? Well, it would certainly confuse the altcoin market, and it would certainly sow fear inside the altcoin market, because at that point, if a new coin comes up, you don't know, you have no idea if the FBI made it. In fact, we really don't know how many of the altcoins that are out there already were possibly created by law enforcement agencies. We know about NextFund AI. Are there more? I don't know, man. In my opinion, just stay away from shitcoins altogether. Okay, I told you either last week or the week before, possibly even the week before that I think that Microstrategy is basically going to dump out of all building of software for business intelligence and go straight up finance. Well, I seem to be right. The Block and James Hunt is going to make my case. Microstrategy eyes $1 trillion valuation in Bitcoin Bank endgame, Michael Saylor tells Bernstein. In a recent interview with analysts at research and brokerage firm Bernstein, Michael Saylor, founder and executive chairman of Microstrategy, said the company's end game was to be the leading Bitcoin bank. Microstrategy has aggressively acquired Bitcoin since 2020, leveraging debt and equity to maximize returns and outperform many traditional investments. The firm's latest purchase of 7,420 Bitcoin announced last month took its holdings to 252,220 BTC, currently valued at just over $15 billion against a total cost of around $9.9 billion and $4 billion worth of debt. That's the equivalent of 1.2% of Bitcoin's total 21 million coin supply, making MicroStrategy the largest corporate Bitcoin holder in the world. Michael Saylor's thesis argues that Bitcoin is the top performing asset of the 21st century. He sees it as a revolutionary form of digital capital, offering a powerful hedge against inflation. Saylor believes Bitcoin's volatility attracts investors seeking high returns, and over time it will become essential for institutional and retail portfolios. Now, under Saylor's leadership, the firm has certainly shown conviction in the thesis. So, if it's right, and MicroStrategy becomes a large company with hundreds of billions of dollars in Bitcoin, what's the end game? Saylor sees MicroStrategy as a Bitcoin bank in the core business of creating Bitcoin capital market instrumentation across equity, convertibles, fixed income, and preferred shares. Bernstein digital asset lead Gautam Shangi told clients in a Friday note, quote, "This is the most valuable asset in the world. The end game is to be the leading Bitcoin bank or merchant bank, or you could call it a Bitcoin finance company," Saylor said. "If we end up with $20 billion of converts, $20 billion of preferred stock, $10 billion of debt, and say $50 billion of some kind of debt instrument and structure instrument, we'll have $100 to $150 billion worth of Bitcoin. The company trades at a 50% premium with more volatility and ARR. We can build a company that has a 100% premium to $150 billion worth of Bitcoin and build a $300 to $400 billion company with the biggest options market, the biggest equity market, and then we basically start to chew into the fixed income markets and we just keep buying more Bitcoin. Bitcoin is going to go to $1 million a coin, and then we create a $1 trillion company," end quote. The firm's strategy is based on its long-term belief in Bitcoin as the best deflationary money. If U.S. capital markets allow MicroStrategy to raise funds through debt, equity, and other instrumentation, it will happily scale an arbitrage between USD capital markets and Bitcoin, which Saylor expects to grow by 29% annually in his base case scenario, the Bernstein analyst said. Asked how scalable the firm's debt strategy was, quote, "I think it's infinitely scalable," Saylor replied. Quote, "I don't have any problem seeing how we could raise $100 billion more capital and then $200 billion after that. It's a $1 trillion asset class going to $10 trillion and then going to $100 trillion. The risk is very simple. It's Bitcoin. You either believe Bitcoin is something or you believe that it's nothing," end quote. Chugani also noted Saylor's view that Bitcoin's underlying average annual growth yield was attractive enough to continue making money on capital market arbitrages and not lend out Bitcoin like a traditional banking model. Quote, "My view is that it's much more intelligent to borrow $1 billion from the fixed income market and lend it to Bitcoin at a 50% ARR with no counterparty risk than to reverse that and find someone willing to pay me 12 to 14%, Saylor said. The MicroStrategy founder argued that lending to individuals, corporations, and governments is much more risky than lending to Bitcoin, by which he means investing in Bitcoin, adding that the firm doesn't currently plan to lend out any of its Bitcoin holdings. Quote, "Instead, we think it's a better idea to borrow $10 billion from people who would be eager to lend and give them 100 basis point more yield, and then lend to Bitcoin for 30 to 50% interest with no counterparty risk. Once you get past the volatility and learn to manage it, The bear case scenario I foresee is Bitcoin increasing by only 22% a year over the next decade. Who would pay you 22% interest? Chugani said that MicroStrategy believes it has bridged USD and Bitcoin markets by offering investable instruments, giving investors exposure to Bitcoin volatility through options and convertibles with downside protection. But on the other hand, MicroStrategy benefits from low-cost debt and attractive conversion premiums, a model hard for smaller companies to replicate and larger firms to offer due to their diverse business focus. Bitcoin miner Mara is currently the second largest corporate Bitcoin holder after MicroStrategy, with holdings of 26,842 Bitcoin, according to Bitcoin Treasuries. Japanese investment firm Metaplanet, which has perhaps been mirroring MicroStrategy's playbook most closely, holds just 748.5 Bitcoin following its latest acquisition. Quote, every company in the crypto ecosystem, including all Bitcoin miners and exchanges like Coinbase, Block, should adopt Bitcoin as a treasury reserve asset. They are destroying as much shareholder value with their balance sheets as they are creating with their P&L, Saylor said. Quote, we're gradually winning over companies like Semler Scientific and Marathon, which have taken a new stance, and I expect to see more Bitcoin miners and exchanges follow suit over time. Okay, this is exactly what I thought was going to happen, and it looks like I was right. So I'm not going to toot my own horn. Let's go ahead and run the numbers. West Texas Intermediate oil is down 0.5 point, but still chilling out at $75.50. Brent North Sea is down 0.42 to 79.07. Natural gas down almost 2 points. Gasoline is up 1/3 to $2.15 a gallon. Shiny metal rocks doing well. Gold, wow, dude, 1.44% to the upside, chilling out at $26.77 30 cents. Silver is up 1.7, platinum is up 1.8, copper is up 1.25, and palladium is the only one in the red, but basically it's just moving sideways. Biggest loser in ag today is going to be, what is it? It's going to be coffee, 1% to the downside. Biggest winner is chocolate, 3.11% to the upside. Most of the ag is in the red today. Live cattle in the red, down 1/4. Lean hogs in the green, 0.88% to the upside, and feeder cattle basically moving sideways. Legacy indice equity markets are doing well, I guess. Dow is up over 0.5 point. S&P is up 0.4. NASDAQ is up 0.07. And the S&P Mini swinging for the fences, 1.4 to the upside. And we've got some green candles today on Bitcoin. We're back up to $62,350. And no, I'm not going to say it. 58K. $1.23 trillion is the market cap, and we can still only get 23.3 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,766,017.99 of, and fees are skyrocketing today. And I got something to say about that. 0.2 BTC in fees on average on a per block basis. Now check this shit out. There's now 117 blocks carrying 247,000 transactions waiting to clear at high priorities of 51 Satoshis per VByte. Not 5, not 15, 51. 51 Satoshis per VByte. We have not seen prices this high for this. And honestly, these are sustained prices. This isn't something like it's just like a little bump in the road. It's going down a little bit, but these prices have actually been into double digits for a couple of days. What does this tell me? This is actual, real life, organic purchasing of Bitcoin by people in retail that know how to actually buy Bitcoin. These are real transactions. I'm looking at mempool.space. I don't see as many data transactions as I normally see. And a data transaction is that ordinals crap. Really tiny amounts of like data, but they're paying really high fees for it. That's that ordinals trading stuff, and that seems to be dying off a little bit. I'm seeing honest to God transactions for the first time in quite a while. Generally speaking, I've seen 8. I've seen 2 Satoshis per VByte for like the last 3 weeks. We've had insanely low fees. Then we get this huge dump yesterday. We go back down into 58K gang territory, and I'm getting really sick of the 58K thing. I'm getting sick of people saying, yay, celebrating 58K, memeing about 58K. I'm done with it. But yes, we got back down there again. Maybe it's the final retest of 58K. I don't know. But then all of a sudden, we see this slow chugging, grinding, ramping up of the Bitcoin price from this low. I think it was at 58,600. I think it might have gotten all the way down to 58,000 and like $100, something like that. But we see this slow grind over the last, 20 hours or so, longer than that, of the Bitcoin price coming back up. Now it's at 62,314. All right. So I think that between what I'm seeing in the price charts and what I'm seeing with these much higher prices for getting your transaction through, I think what we're actually witnessing is real, honest to God purchasing of Bitcoin by plebs and retail on the open market. That's my thoughts on that. Now, from Nobel Buterin, which was yesterday's show, I got FOMO Matronic. Yeah, FOMO Matronic with 1001 says, gives me a little smiley emoji. Thank you, brother. God's Death with 537. Thank you, sir. No, thank you. User 11556842 with 500 says, something meaningful. Squeeze your sats softly. Wartime with 333 gives me 3 fire emojis. Aggie Choked with 100 says, whoop-de-doody day. Pies to pleb, my friend, with 100 says, thank you, sir. No, thank you. And Nostr Gang with 100 says, boost. That's the weather report. Welcome to part 2 of the news you can use. The 2140 Foundation has launched support for open source Bitcoin development. 2140, which is, by the way, if you're wondering why people name these things like Jan 3, Samson Moe's company, what was it, 1031? These are all something to do with dates about Bitcoin. And 2041 is the proposed year at which the subsidy of Bitcoin mining will actually cease, and there will be no more Bitcoin reward. Everything will have to be done on a fee basis only to actually support the network. So 2140 is a new nonprofit organization in Amsterdam, co-founded by Bitcoin developers Jose Baker and Ruben Somson, dedicated to supporting open source Bitcoin research and development. Quote, our mission is to provide protocol veterans with long-term stability through employment in our Amsterdam office and to onboard aspiring contributors. Cryptocurrency exchange OKX has provided initial multi-year grant to support the 2140 Foundation's efforts to enhance the security, resilience, and maintainability of the Bitcoin network. Quote, we're happy to announce a grant to 2140 Foundation, a Bitcoin developer foundation. This funding will support the foundation's multi-year effort to foster long-term security, resilience, and maintainability of the Bitcoin network through sustained development, innovation, and collaboration among developers and contributors, said OKX in a press release. Quote, I also want to mention OpenSats and HRF, who in the past have funded either Ruben and I individually and have also been instrumental in helping us get this thing off the ground. As a personal shout-out, I want to mention Mike Schmidt from Brink, said Josie Baker during the announcement. Open source Bitcoin contributors interested in working with 2140 in Amsterdam can reach out at hello@2140.dev. The number's 2141.dev. That's hello@2140.dev. Just drop them an email if you're interested in getting, information on how to apply for a grant. That's hello@2140.dev. The foundation is currently launching a fellowship program designed to provide mentorship and hands-on experience for aspiring full-time contributors. More details about the program will be released later. You can support the organization here, and here is a link to 2140.dev. /donate. That's the numbers 2140.dev/donate. So there you go, man. We've got a third player in the space. So that makes HRF grants, OpenSats grants, now 2140 Foundation grants, and Arthur Hayes Family Foundation, or his family office. And what's the name of that thing? Oh God, it's Maelstrom. So there's at least 4 granting institutions that are supporting either Bitcoin, open source development, or like stuff like nostr. This is amazing. I cannot wait until we get to 10 granting agencies, because this is what we need. This is how we win. All right, here's a mining story out of Bitcoin Magazine. Nicholas Hoffman: I just entered the Bitcoin mining lottery. Let's find out. So many people are mad about stuff like bit axes. I don't understand the ire. I don't get it. It's like, you're just being dumb when you buy one of these things. I disagree, but whatever. Let's read this from Nicholas Hoffman. When I first came into Bitcoin in 2017, I had changed my Twitter handle to Nick Can't Mine. It was a joke I thought was funny at the time, since I didn't have the resources to mine BTC in high school. But today, I officially became Nick Can Mine. The other week, I got gifted a bit axe, a fully open source and very small Bitcoin miner, while attending the Human Rights Foundation Bitcoin Summit in Nashville. It's a pretty neat device that allows you to connect to a mining pool, or you can solo mine on your own. Setting up the device was fairly easy. Tinkering with it was fun, and having the ability to hold a miner in the palm of my hand felt pretty cypherpunk. It felt cool, like a cool way to introduce someone to mining on a very small scale. This is what I've been saying, man. Come on, Nick. Give me some credit here, pal. Of course, by connecting this miner to a pool, I wouldn't stand to gain any real profit, as this miner is negligible compared to what power is actually needed today to profitably mine BTC. But solo mining with this machine is where things get a bit interesting. Earlier this summer, BitAxe Solo Miner actually beat the odds and mined a solo block, earning the block reward of 3.25 BTC, currently worth over $205,000. Data shows this miner had mined consistently with 500 gigahashes per second worth of hash rate for weeks, and then had increased its hash rate up to 3 terahashes right before the block was found, which somewhat encourages me, knowing that my BitAxe is currently mining at over 634 gigahashes per second. But I'm not getting my hopes up, considering I don't have more hash rate to add, and the odds of finding a block with this little hash rate is around 1 in 1.2 million per day, according to the solo CK pool admin, Dr. CK. Still, I got this machine for free, so I thought, why not plug it in and see what happens? I'll deal with the power bill later when I see how much it is, and reevaluate if this is worth it to keep running. Having used it, I probably wouldn't have purchased one based on the economics of it alone, since I wouldn't be able to make my money back unless I hit the lottery. But I would maybe purchase one just to have a fun toy. The odds of me finding a block is 0.001% per day, but it honestly just feels fun to have running in hopes of finding a solo block. I can keep my BitAxe running 24/7 if I want to, since it only requires a 5-volt power cord plugged into a normal electrical socket to operate. I've got it set up right here on my desk next to my monitor. Together with a new cold card queue that I just got, I couldn't stop thinking about how cool it would be to win a solo block mining with this and have that BTC reward sent to a brand new Bitcoin wallet. This would mean there is no public record of me receiving either the BitAxe nor the cold card apart from this article, and I'd have some sweet KYC free Bitcoin. All right. So Nicholas has a good take on why would you want a BitAxe? Nick is looking at it as just for fun and the possibility of, getting a block reward. Honestly, that's, in my opinion, that is only 1/10 of if you're interested in this kind of thing, why you might consider getting something like a BitAxe to teach you how to mine. to give you a reason to go interact with the various mining interfaces. Like, how do you monitor your miner? How do you plug into a pool? How do you switch pools? Can you use any of the template stuff going on? Like, what was it? Ocean just released Datum, and that's going to be come out. And then we've got Stratum V2. How do you do that? Well, without a miner, you kind of, I mean, unless you want to emulate a miner, but nobody's going to do that. I think it really means something if you have the device in your hand, you're using electricity that you're paying for, and it's sitting on your desk and you can see it running. I think it takes something like that physicality for you to go, you know what? What does jumping pools look like? How do I automate that process? How do you get a situation where your miner can jump a pool if you are monitoring all these different pools and find out that one miner has over 47% of all the mining hash rate? How do you automate that? You're never going to know unless you actually do the mining stuff. And you don't need to actually buy a used S19. You can just get a BitAxe, and you'll have you'll have everything that you need to be able to engage with all of these, with that entire ecosystem. I engage with Start9 and my node, my Bitcoin full node, my Lightning node on a daily basis. I don't know a damn thing about mining, which is the only reason that I want to get a BitAxe. And I also think it would be fun. I just think that Nicholas is kind of missing the boat on the rest of the story. And the rest of the story is the amount of knowledge that you would gain by learning how to do all this might actually, you never know, change your life. Not because you want a block, but because you know how to mine. That's probably going to be important later. And speaking of mining, Bitmain has launched the Antminer S21 Plus series. At the Bitcoin Amsterdam 2024 conference, Bitcoin miner manufacturer Bitmain announced not one but two new machines, the Antminer S21 Plus HYD, for Hydro, I suppose, and the Antminer S21 Plus. The Antminer S21 Plus HYD is said to deliver a hash rate of 319 terahashes per second and an efficiency of 15 joules per terahash. Not bad. The S21 Plus model promises 216 terahashes, so essentially 100 terahashes less per second with the power efficiency of 16.5 joules per terahash. They will be shipping these products in the first and second quarter, or somewhere around the first to second quarter of 2025. The firm also showcased its latest products featuring the air-cooled Antminer S21 XP, the oil-cooled S-Miner 21 XP IMM, which I assume means immersion, and the water-cooled container Antrack, ANTRACK. And that's a nice-looking rack, brother. That's a nice-looking rack. Now, let's see, what's up? Oh, last thing up, Phoenix Wallet version 2.4.0 and Server 0.4.0, new open protocol for async LSP. This is a major release for Phoenix Android, iOS, and Server, which is known as Phoenix D. It makes these products compatible with the new open protocol now being used by async LSP. Quote, today we've moved our LSP to a new open source protocol with an open source implementation, replacing the previous proprietary closed source LSP protocol that we've been using since the beginning of Phoenix. So they basically just opened everything up for everybody in the world. Upgrading to mobile 2.4.0 and Phoenix D 0.4.0 is required for liquidity features such as on-the-fly liquidity and on-chain deposits, as well as manual liquidity requests. Outgoing on-chain and off-chain payments should still work without the upgrade. Quote, there are some minor UI differences, but no functional change. The fee schedule is unchanged. This new protocol will allow for even more on-chain efficiency in the future, so stay tuned. And that'll do it for the show today, man. You guys have a wonderful weekend. I got to jump. I'm going to bail. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.